Hello, everyone. I'm Emma Wilson. Right now, there's a real estate nuclear bomb ticking above Canada's housing market, and the countdown clock is getting faster every single day. Yes, the Greater Toronto Area, GTA, the beating heart of Canada's real estate economy, is experiencing an unprecedented sales collapse. And it's not just Toronto sounding the alarm. From Vancouver to Ottawa to Calgary, red warning lights are flashing nationwide. Experts at Build, the Building Industry and Land Development Association, and Altus Group have issued the starkest warning yet. If governments remain on the sidelines, between 2027 and 2031, Canada could face a devastating triple shock: housing shortages, economic turmoil, and a tsunami of unemployment. Today, we'll break down what's happening in the Canadian housing market, why this crisis is spreading so fast, and why the next few years may become the darkest chapter in Canada's housing history. Sales in free fall, the worst August in a decade. The numbers are shocking. In August 2025, GTA new home sales totaled just 300 units, down 42% compared to August 2024. A jaw-dropping 81% below the 10-year August average of 1,595 units. Breaking it down by housing type: condos, 118 units sold, down 59% YoY, 90% below the decade-long norm. Single-family homes, 182 units sold, down 21% YoY, 59% below the 10-year average. Edward Jegg, research manager at Altus Group, delivered the blunt verdict. GTA new home sales have hit rock bottom. New project launches are at historic lows, while completions are at record highs. The message couldn't be clearer. Homes aren't selling, new projects are being shelved, and construction sites may soon grind to a halt. Inventory explosion, a market on the edge. The GTA now holds a record 22,245 units of unsold new homes, 16,447 condos, 5,798 single-family homes. Months of supply? 20 months. At 20 months, the market is essentially frozen. Developers are sitting on a mountain of unsold inventory, bleeding interest costs every month while buyers stay on the sidelines. And the situation outside the GTA looks even worse. In Simcoe County, 0 condo sales were recorded in August. Single-family home sales there totaled just 36 units, at an average price of $1.113 million. Developers are getting squeezed from both ends. Buyers are vanishing, and lenders are growing nervous. Cash flow is drying up, while future projects are being delayed or canceled outright. A nationwide housing freeze. This isn't just Toronto's problem anymore. Vancouver, new home activity at just 1/3 of normal levels. Ottawa and Kitchener-Waterloo, frozen markets with plunging sales volumes. Even Calgary, once the last stronghold of housing optimism, is flashing early warning signals. When multiple markets across the country start freezing at once, it's no longer a local downturn, it's a nationwide housing cold wave. How we got here: interest rates, costs, and confidence. Several forces have converged to create this perfect storm. Skyrocketing interest rates. After years of cheap credit, the Bank of Canada's aggressive rate hikes have slammed both buyers and developers. Mortgage costs have doubled for many households, while construction financing has become painfully expensive. Exploding construction costs, labor shortages, supply chain disruptions, and soaring materials prices have made new projects far riskier. Crashing buyer confidence. With prices sliding and headlines screaming housing correction, buyers are waiting on the sidelines, hoping for bargains or interest rate cuts before re-entering the market. Government inaction. Despite repeated warnings from industry groups, meaningful policy responses, whether on housing supply, zoning reform, or tax incentives, have been painfully slow. The result? A full-scale housing freeze that threatens to turn into a housing recession. Economic fallout, jobs, budgets, and future prices. Housing isn't just about shelter, it's the backbone of Canada's economy. The construction industry alone provides 256,000 jobs in the GTA and contributes $39.3 billion in investment value every year. But if this market collapses, those jobs will fall like dominoes. Every lost construction job triggers the loss of 2 to 3 additional jobs in related sectors. Up to 750,000 jobs nationwide could vanish in a full-scale housing downturn. The consequences would be severe. Unemployment would spike, putting massive pressure on social safety nets. Fiscal deficits would balloon as tax revenues collapse and emergency spending rises. Future housing supply would be gutted as today's canceled projects create tomorrow's shortages. And here's the cruel irony. When the economy eventually recovers, housing supply will be so limited that home prices could rebound violently, locking an entire generation of first-time buyers out of the market for good. Fake stability before the storm. On paper, prices look stable. GTA condo benchmark price, $1.029 million. GTA single-family homes, $1.462 million, down 8.5% year-over-year. But this so-called stability is an illusion. With sales volumes frozen, developers pausing projects, buyers holding back, and banks tightening credit, this isn't a healthy market. It's the eerie calm before the storm, a market in cardiac arrest, with policymakers watching from the sidelines. Thanks for tuning in to Canada Finance Watch. If you found this episode helpful, please like, subscribe, and hit that notification bell to stay updated. Are you feeling the renewal crunch? Drop your story or tips in the comments below. We'd love to hear from you. I'm Emma Wilson, wishing you financial stability and a stress-free life. See you next time.